So for today's version of this edition of Bitcoin Brief on Thursday, June 11th, we have Tone Vays, the Bitcoin educator. We have Jimmy Song, who's a publisher of Programming Bitcoin, and we're going to dive deep into today's top headlines. The markets have tanked today. Bitcoin has slightly gone down along with it. How are you doing, Jimmy?
I am doing great. Yeah, the everything in the world just is completely unpredictable at this point. I'm kind of afraid what tomorrow might bring, but you know, I don't know. I hope those people in Seattle had a good time, like being autonomous for all of like one day.
Tone, how are you?
I'm good. I'm good. Waiting for the world to get back to normal. We're getting close to that time where there may or may not be a bunch of COVID cases from all the protests. So we should figure that out very, very soon. But yeah, lots of interesting stuff happened in the world of crypto since our last show just a few days ago. So let's get to it.
All right, let's take a look at today's headlines. So I'm going to start sharing my screen. And I'm Christine, a New York-based reporter. And here we go. Okay. Let's take a look at our first article here. Ethereum whale pays 5.2 million in fees for two mysterious transfers totaling $82,000. That's an expensive transaction. Slip of the finger, masochist, it's not yet known, but over the past 2 days, an unknown wallet holder has paid some 5.2 million in transaction fees for two Ether transactions. Jimmy, what happened here?
Well, it's hard to know. What we do know is that those two transactions are on the Ethereum blockchain, and they do have fees of 2.6 million when they were only transferring about 150 bucks or less. So it's a really strange transaction. But you know, if it happens once, then it might be like a fat finger. They might have reversed the amount and the actual fee. But it happened twice, which makes me highly suspicious given all of the different kinds of weird products that are on Ethereum. So some people suspect that this might be trying to manipulate certain things within Ethereum. Perhaps there's like some sort of bet about like what the average fees on Ethereum might be, and it might be rational for somebody to do something like this as a way to bump up the average fees or something like that. It might be something more complicated involving some sort of a DeFi contract where, you know, if you do something like this, it opens up or exploits some other hole or forces them to pay based on some contract for difference or something like that. It's really hard to know. But the fact that it's happened twice, I think, lead many to believe that this is not an accident. It is interesting, though, that Shark Pool is the one that that the fee went to. Generally, it's not normal for like if you're going to do a transaction like this to manipulate the market, you want to make sure that you mine it to yourself, so you keep you keep that fee. But Shark Pool is known to be diverse, although they freeze the $2.6 million worth of Ether each time. So they're still trying to figure out what to do with it. If it was a fat finger, I think there's some precedent for them to get 50%. So that's still worth $2.6 million and they get some goodwill out of somebody. But I mean, it's a lot of money. It's kind of a crazy situation.
Yeah, so I want to point out this tweet from Whale Panda. Another ETH transaction with a huge fee just went through. This time the fee was exactly the same as the last one, and it was from the same address, which makes this very weird. And we see the transaction here on Etherscan.
Yeah, so that's the second one, which sent 350. The first one sent 0.55. But the transaction fee was exactly the same. No one's really figured out why these are the amounts or why it happened this way. But Yeah, it's either somebody that was really stupid or somebody that's trying some sort of, smart contract lawyering on some DeFi contracts.
What I thought was nice was that Sharkpool was they have in the past withheld the fee and just tried to get a hold of this person to see if it was a mistake. Regarding this latest transaction, a Sharkpool spokesman told CoinDesk it was following up and welcoming any potential leads about the identity of the sender just in case it was sent by mistake.
Yeah, hopefully they find them. I mean, Tone and I did a show a long time ago about 50 BTC that somebody accidentally sent because of the terrible UI in blockchain.info's wallet. Unfortunately, that money never got returned, even though he was able to sign, from that address. So the fact that they're willing to do that versus the Chinese mining pool that didn't return it to the people that we showed in 2017 is a very good thing. But that said, I suspect there's some weirdness here, and not necessarily a fat finger.
Yeah, Tone, what are your thoughts on this?
Yeah, I'm really curious if at the end of the day, if it turns out that this was a bad DeFi contract. That's basically the only thing I'm waiting on for someone to figure that out. The other thing is, like, how much do people care? Like, if this was Bitcoin, like, oh my God, a Bitcoin from 2009 moved and like 1,000 people try to get to the bottom of it. The thing is, if someone doesn't figure out what really happened here, like next week, no one's going to care because it's Ethereum and no one really cares. So I would like to know if it was a DeFi contract or not. Other than that, like Ethereum, we're just waiting for it all to eventually implode. I do want to give a little plug to Leah. I just realized that Christine, yeah, I sent you an article. She just wrote up a Medium article about Ethereum and why it's going to go absolutely nowhere. So yep. So Leah, and with her new venture into the hedge fund space, in her latest venture into the hedge fund space with exponential investments, pretty much following up with what Lucid Investments was doing in their understanding of cryptocurrencies and investing in them. So a little plug for Leah right there. Check out the article.
Excellent. And I'll just point out in this Forbes article, it was suggested that it could have been a wallet error. The address, no, let's see. Something about, yeah. The firm has noticed this is TX sender, contact us or DM us for our support. Which could that be the reason? A software wallet error. There it is. The bug, an associate professor of computer science at Cornell University suggested, resulted in the swapping of two fields in an API call. This was in reference to how the user likely intended to transfer the 10,668 Ethereum to the destination address, but ended up spending that sum as a transaction fee instead. Does that make sense to you, Jimmy?
Any comment made by Emin Gunsayer of Cornell should be ignored by anyone.
Well, in this case, he might be right. You could easily swap to particular fields or something like that. I don't know. The fact that it comes from the same address probably means that it's probably from the same person. Whether they're doing it nefariously or because they're dumb is yet to be seen. I think there's more to this story that we'll find out in the next few weeks.
Interesting. All right. The next story we've got is the Pentagon documents reveal the U.S. has planned for a Bitcoin rebellion. This is interesting. This had me laughing. Bitcoin has struggled to find support in the U.S. government, with President Donald Trump, along with Treasury Secretary Steven Mnuchin, leading the criticism. Now it's been revealed the U.S. Department of Defense has war-gamed scenarios involving a Generation Z rebellion that uses Bitcoin to undermine and evade the establishment. In the Pentagon war game, young people born between the mid-1990s and early 2010s used cyber attacks to steal money and convert it to Bitcoin, documents published by investigative news site The Intercept say. Okay, here's The Intercept document on it. Got the Pentagon war games, includes scenario for military response to domestic Gen Z rebellion. You can actually see the document here. It's a notional exercise material for educational purposes only. Tone, let me gauge your reaction when you read this.
Yeah, this is, I found this to be really, really interesting. It means that at least some members of the government are taking Bitcoin seriously in a proper way, taking it seriously in order to understand it. So the first thing that stood out is, why are they like age discriminating? Why do they have to be born in the 90s or 2000s, right? Like Jimmy and I were born like long before 1990, and like that part is like strange. Like it could be anyone. That's the thing. This is supposed to take place in 2025. I think I think the date part is pretty accurate. I mean, 2025, Bitcoin should be liquid enough. But they are like, I guess it's a good experiment for the Department of Defense because they have to narrow down what they're doing. But in general, it's the right concept. You can use Bitcoin to exit the current system. And governments controlling money is a way of controlling the population. If we go back to the Forbes article, and if you want to basically scroll down near the end, Christine, because there were a couple of good comments there. Yeah, right below that part, just a little bit lower, right there. So the quotes that say one of the most important tools, if you want to read just those couple of quotes, I never heard of Nathaniel.
One of the most important tools in the authoritarian toolkit is the ability to freeze the funding of legitimate political dissent, says Nathaniel Whittemore, a Bitcoin and cryptocurrency consultant and strategist, said previously. By separating the infrastructure of money from the infrastructure of state power, Bitcoin makes it that much harder for this type of politically motivated confiscation.
Right. Oh, and if you go back up and just read the paragraph above that, all that actually, that was really interesting.
Okay. The Pentagon war game documents have been revealed after Florida Republican Representative Matt Gaetz called for the government to freeze the money of demonstrators after countrywide protests over the killing of George Floyd turned violent this month.
And I have not clicked on that word freeze, but if you can click on it, I'm really curious what that article looks
like. Okay.
Bitcoin
counters Donald Trump's Antifa protest threat.
Okay, that's okay. Well, we don't have to read it, but if we go back to the original now, basically that statement is very, very powerful. So basically, someone called for the freezing of assets of protesters in the George Floyd. Look, I wasn't like a huge fan of the protests. I'm certainly not a huge fan of the of all of the looting and the rioting. But I will like make a stand that the government should not be freezing anybody's money. Like that's where I really draw the line. Like as much as there's thousands of people, millions of people that I don't like, and I wish something is done about the people, but freezing their money is not one of those things. Like those people should have access to their money the way they should have access to their arm or their eyes. So the sooner the government starts freezing people's assets because they don't like their political, what they do with their political thinking, the sooner Bitcoin actually goes to $1 million a coin. I think I should add that, but I've always said that. So that's huge. So if this is the reason that they think that will motivate people to get into Bitcoin, hell yeah, they are absolutely right. So I found this really, really interesting, and some of like the statements once you read between the lines.
It kind of mimics what we're seeing in Seattle right now, where there is a commune or a group of protesters who've kind of commandeered the streets and are erecting their own kind of community, if you will. Trump has been lambasting it. Who knows what could evolve out of this? They're not using any type of currency right now. But they're trading things or giving things away like food and water, that kind of thing. Maybe something like that, could evolve into a place where they could use digital currencies. I don't know. What's your take on this, Jimmy?
Well, so Pentagon runs war games all the time, and just to give you some perspective on it, when they run these war games, they come up with a very specific scenario, right? They'll be like, okay, China has decided to take over Taiwan using land-based troops, and like they have they've started doing economic sanctions or a trade blockade or something like that. Like they come up with a hyper specialized war game where they gave a scenario, and the scenario, whoever writes the scenario comes up with all of the relevant things that are going on. It sounds like from this article that they, whoever wrote the scenario came up with this as a way to, okay, what would our response be? What would we actually do, and how would we actually react to it? And it's something like a grassroots rebellion where you can't necessarily just go ahead and freeze everyone's accounts. In that case, the Pentagon's asking a question that they're trying to figure out the answer to, which is, what the heck would we do? How would we be able to make sure that these people don't completely disrupt the United States and topple all of those people that are in power? And it's a reasonable question to ask if you're in the military, especially during peacetime. Because, like, who knows what sort of things might happen. And they do all sorts of different war games, and they have different scenarios. This happened to be one of them. The fact that Bitcoin has entered into one of these scenarios tells you that, okay, well, at least they have an idea of what Bitcoin can do and what the possible threats might be. But as Tone pointed out, the main thing there from this story that's interesting is the acknowledgement that Bitcoin is something that you can't take away. It's a stronger property right than the US dollar is. The US dollar can be frozen, that can be seized, it can be even inflated away. Bitcoin is not like that, and that's what makes it so powerful. And that's why I suspect that it's going to win inevitably, because it has properties that nothing else can match.
Yeah. And if we go down to the last sentence, actually, I just remembered the other thing I wanted to say.
All right.
If you want to just read the last sentence.
Yeah, it appears, however, that its capacity for censorship resistance might be just as relevant.
Oh, as a, sorry, that was a, right. So, so Billy, who we cover often on this show because of his articles in Forbes, Billy, you should come to the Unconfiscatable conference, because unfortunately you got your Bitcoin use cases off a little bit. This is not the censorship resistance property. This is the unconfiscatability property. The censorship resistance property is the ability to send Bitcoin somewhere without a middleman. So hopefully you attend Unconfiscatable, and you will link to that conference the next time you mention the unconfiscatability property. And this property that you are describing, I believe, is the #1 property for Bitcoin. And that's the property that got me involved in Bitcoin. So it's really, really important. And because the other one you mentioned is Bitcoin's hedge against inflation. And that's what Saifedean's book is all about. And that's Bitcoin being hard money. Again, completely different property. Unconfiscatability is absolutely key. And the biggest problem, as Jimmy and I both pointed out, the freezing of the assets, the fact that the government has gotten so dependent on their, how can I phrase this politically correctly? The government has gotten overly dependent on the ability to freeze people's money to do their job. Because 100 years ago, they did not have that ability at all back in the world of gold. and people just held their own gold. So yes, the problem here isn't Bitcoin. The problem here is the last 100 years has made you incredibly comfortable in the way you enforce your laws with something you could never do before. And you're going to lose that ability soon enough.
What would be, well, I think from China with their development or attempt to develop the digital currency, I mean, one of the things they could certainly do is freeze people's money. So if nations start making their own cryptocurrencies, that's certainly something that could be a possibility if that is utilized by people and put into action. That would be something to worry about. But I do find it interesting that the Pentagon is wargaming scenarios like this. I mean, they do scenarios like this for everything, but at least they're thinking about it. I would love to hear some of the responses that were written to these educational exercises, if you will.
Yeah, no, Christina, you just made an excellent point. I'm not going to spend too much time on it, but I didn't even think about that. You're right. You're 100% right. If China does release its digital currency to the world, and it's all digital, controlled by a central server in China, why in a world would other countries use it? Because China could just cut them off from that currency and all their citizens if they decide to use it as, let's say, the future global reserve currency. That's not going to happen. And again, Bitcoin has the advantage there. Jimmy, your thoughts?
I mean, that's happened with the dollar, Tone. This is how they took what was it, Noriega's money in Nicaragua. You know, like it's happened before. Once you're the standard, once you're the reserve standard for the world, then you don't have to worry about scenarios like that because everyone else is on it. You're kind of forced to be on it. And yeah, I mean, China's trying to topple the U.S. dollar hegemony. That's going to be very, very difficult. But, you know, this is why they're starting in places like Africa where they have a lot more influence.
All right. Let's take a look at the next story. And we've got Microsoft dabbling into decentralized identity. So this is from Pamela Dingle of Microsoft. Ion booting up the network. Hi, everyone. I am really excited to have Daniel Buckner, one of my team members, development of the side tree protocol at DIF, here to talk about a huge step for us at Microsoft in the decentralized identity space. This work has been a long time in the making, and we are looking forward to your thoughts and feedback. So the note goes on from Microsoft.
I think that second paragraph is interesting. I don't think there's anything interesting.
Yeah, okay. Decentralized identifiers is the foundational technical component that makes decentralized identity possible. Unlike centralized identifiers commonly used today, like email addresses, usernames, etc., DIDs are generated, owned, and controlled by individuals, not companies or other centralized entities. There are many different approaches to creating DID protocols, but they all revolve around the same concept: user-owned unique identifiers tied to a set of cryptographic keys and routing endpoints. While it's not difficult to create a basic DID protocol, creating a robustly decentralized and scalable network without resorting to trusted validator nodes, utility tokens, and other mechanisms is incredibly challenging. So, Jimmy, Microsoft is dabbling into decentralized identifiers, decentralized identity. What's your take on this?
Well, so this is something that they've been working on for a while. Daniel Buckner and I know some other people that have been working on this. Essentially, they're building it on top of Bitcoin. And the reason why they have to do that is because of something called the public infrastructure problem in computer science. So if you guys know how public key cryptography works, I have the private key, someone has the, everyone else has the public key. And this is how Bitcoin works is I'll sign something with my private key and everyone else can validate that with the public key that I actually signed it. It can actually also work in reverse. So if you have the public key, you can send me a message that only I can read. No one else can read it. And this can be very useful for encrypted communication and such things like that. Now, that would be great, but you need some way for people to be able to get everyone else's public keys. And that's what's called the public key infrastructure problem. Because if you do it in a centralized manner, if you put it all on one server, then that server effectively has the ability to censor certain people and not validate certain people or fake certain people and so on. So that becomes a big deal. The ability to manipulate that database means that they have all of the power. So stuff like PGP, which is an encryption protocol where you have to go and get somebody else's pub keys. Well, there are a bunch of different servers that have all of these public keys, but it's not really necessarily authoritative. And you have to do wacky stuff like web of trust and things in order to make that work. So the idea behind this one is that with decentralized identifiers, you can have a public key infrastructure on top of Bitcoin. Because Bitcoin is decentralized, you can sort of borrow that ability by using the DID protocol. And what essentially how it works is that you have a private key and you put a small amount of Bitcoin on it. And based on the output, that is the public key that everyone else can use to encrypt messages to. And since you have that coin, you can move it later and then expire the previous key and so on. It's a really clever way to do it. And it can only work if you have something decentralized in the first place, which Bitcoin is. So that's sort of the idea behind it, is to allow for some sort of a public key infrastructure. Now, there are other ways to do this, including using something like the Lightning Network, because if you're a Lightning Network node, you're essentially broadcasting a public key. But this one's a little more permanent because it's on the blockchain, and therefore you can just go look it up by, looking it up on the Bitcoin blockchain.
A couple of questions from some users or viewers. So how would this DID system impact Bitcoin adoption?
Well, so if a lot of people are using DIDs, then that means that everyone has to have at least a little, everyone that has a DID needs at least a little bit of Bitcoin, or whoever the provider is, they need to spend a little bit of Bitcoin in order to register essentially a key onto a public key onto the Bitcoin blockchain. And that's how it will work. So I suspect that demand will go up, but depending on like the popularity of this system, if 100 people are using it, it's not going to make a difference. If 10 million people are using it, yeah, that's going to make a difference. So it really depends on the number of people and the number of users that might be on this thing. But I think the way they're doing it, or their particular implementation, might use something like a side tree, which is something a little bit different than what I described before, which is like sort of compressing it a little bit and having a proof like anchor to the Bitcoin blockchain or something like that.
Here's another question. Is it setting up Microsoft as a controlling partner to the next global digital currency? Tone, is that something? Yeah. Oh, Jimmy, go ahead.
No. Yeah, it wouldn't. So the whole idea is that this is decentralized, and the place where everything gets stored is the Bitcoin blockchain, and what they're developing is just a protocol. So they have, okay, you put it on this way and you do whatever. They might build some tools for other people to use, but the data lives on the Bitcoin blockchain, and that's the main thing.
So why would Microsoft, which uses centrally controlled software, be interested in this decentralized Bitcoin technology?
Well, so the difficult thing if you're a company is you're trying to have a standard that everyone can use, right? And that's why they're developing it. It's if it's known that it's a Microsoft product, then a lot of other companies simply won't use it. If like Google, for example, Facebook, I doubt they would use it. But if it's a decentralized protocol, then it has the chance of becoming actually a community standard that everyone can program against. And I think that's what they're hoping for.
Tone, your take on Microsoft's dabbling into decentralized identity.
Yeah, this is really interesting, and I have a lot of questions for Jimmy on this. So finally, there is a decentralized project. I'm not going to say that this makes sense to me yet, but at least it starts to move into the area of this makes sense. Okay, so here's the thing that makes the most sense. So people at Microsoft have figured out that you don't need a garbage utility token to do a job. Okay, so let's start there. So let's give them a little round of applause, because everything about Microsoft that we used to cover 3 years ago was about them integrating Ethereum and something with the Ethereum token. So eventually, smart people at companies come to their senses and they realize, oh yeah, it's at the end of that paragraph too that you read, Christine. Yeah. So no, too far down. It doesn't matter. Anyway, so they're telling you straight up that there's no utility token. So this should be like a little light bulb should go on, not only mostly in the heads of people in the crypto space. There is nothing outside of Bitcoin that requires a utility token that is traded on unregulated exchanges. So they're all bullshit, from the Binance token to the what do you call them, the Brave token to whatever. We've covered them all on these shows going back to the World Crypto Network. They are all bullshit. Microsoft is telling you right now, we can do identity without a native identity currency or a native token. Okay, that's one. My question for Jimmy is, they keep referring to Bitcoin mainnet. What the hell does that mean?
Yeah. So there's a parallel Bitcoin network called Bitcoin testnet, and there's even some.
I'm familiar with that, but like, what do you mean mainnet? Are they building their
mainnet is just the normal Bitcoin network, not testnet. It's
right.
So,
but Bitcoin network is many things now, right? You have on-chain, you have the liquid side chain,
so it would be on-chain Bitcoin. So this would be like literal mainnet or versus testnet or reg test or many others. But basically, this is the main one.
So are they like building their own side chain, kind of like Liquid, but not as robust?
No side chain, or there is something called a side tree, which I think compresses everything to a single output or something like that. But basically, it's an output on a particular transaction that has all of the data for the public keys that you can go look up using some sort of a side tree, which I think you can run on.
So they're actually going to be using on-chain transactions. So isn't this going to kind of clutter the mempool? If everyone starts using this as an identity protocol, shouldn't they start looking into a layer 2 solution like Lightning, as you mentioned?
Well, so that's where Sidetree comes in, I think. So basically, it's what Ion or Ion is, and it's essentially using some sort of a side tree. It's kind of like a sidechain, except there's no additional blockchain. It's just all of the data is sort of compressed into one thing, and you have instead of like continuously running and needing merge mining or anything, you just compress all of that data into one thing and put it on the Bitcoin blockchain every however so long. And then you can look those up by their markers according to the protocol and so on.
Gotcha. Yeah. And merge mining is probably out of the question because they were smart enough not to create their own token. Had they created their own token, then merge mining would have been on the table. So again, I mean, like, I almost don't want to clap for Microsoft. It's kind of like, it's like, who was it, Chris Rock or some other comedian? Well, like you don't get praise for doing what you're supposed to do. This is what they were supposed to do. This is what everyone was supposed to do instead of creating their own stupid blockchains. Anyway, if we go down a little bit further, Christine, they also mentioned no need for validator nodes. But if you scroll down, this is the interesting part. Like keep going further. I still got to look into that. Right there. Oh, go back up. The list of companies. So those look like validator nodes to me. How would that work? So anyone can run their own node here, but clearly...
So the thing that you need to run is a Bitcoin node, And then any side chain data, I think you have to run something like Ion or something in order to get all of the data that's essentially compressed into a single output as to not spam the Bitcoin blockchain. So that's sort of the layer two. And, you know, I guess these companies are, you know, running it and testing it and making sure that, you know, it's not too resource intensive or something like that. Again, like this is completely voluntary. You don't have to run it if you don't want to, and your Bitcoin will be fine.
I gotta interrupt you here. Who in their right mind would add BitPay to their list of not chewing up resources here?
All right, so apparently Microsoft has had a relationship with BitPay that's gone for a very long time. So I think that's the only reason they're on the list. Yeah.
All right.
Hey,
I don't want to too deep into it. Sorry, Christine. Yeah, is there a good question from the live chat?
there's a question from our viewers. Tone Vays, do you think Microsoft doing this will help secure the network, maybe inadvertently, like maybe they will create nodes or miners since they rely on good Bitcoin network health? This is from Sty Guy Bob.
That's a good question. I do think that this would secure the network, help secure the network in many, many ways. Look, the more useful Bitcoin is across all facets of society, the more accepted Bitcoin will be. Just like the more useful the internet became across all facets of society, the more acceptable internet became for everyone. So this basically benefits everyone. And going back to what Jimmy said, to answer the other question, why would Microsoft do this? Well, look, Jimmy and I and a few others, maybe this is a good topic for an eventual show called Understanding Bitcoin, where we can debate if something like this actually makes sense being decentralized. Like, how can you have a decentralized identity? At the end of the day, someone has to, you know, vouch for your identity. Like, I can't just, I don't have any kids yet, but if I can like fake this right now, I'll create an identity for my kid that isn't born yet. So that when my kid is born, he already has an identity, and then he creates another identity, and now he has two identities, right? So how do you game the system? Because just like it's good to have multiple passports, it gives you options. So if you can fake it on the blockchain, great. So at the end of the day, there still has to be some element of centralization and government authority of your identity. I'm sorry, your identity only exists because of government, right? Like otherwise.
Well, no. Well, so that's like for purposes of census or tax collecting or something like that. But it's perfectly normal for people to have multiple accounts on certain services. Like if you're you know, trading on eBay, you might have one account for as a merchant, another as a consumer, something like that. That happens all the time. So the idea behind this is that you don't want it to be Sybilable, and by that I mean you don't want people to just be able to create a million identities, you know, for free. The way you get rid of a Sybil attack is to make sure that it costs something in order for them to do it. Now, this protocol makes it so that, you know, like you can compress a ton of people into a single one, but you can also, you know, be your own and put an output just for yourself. So you're not dependent on whoever is constructing the side chain.
Right. No.
So I mean, it does cost something, and that's why, you know, you know, that's what prevents the Sybil attack. But it's perfectly fine to have 8-10 different identities if you choose to do so, as long as, you know, you're willing to keep them up and so on.
Right, but also but I just want to make it clear to people that, remember, your base identity, Microsoft is somehow going to validate that. Like, you can't just create an identity and then make yourself, you know, of a certain country with a certain birth date. That's not how it would work.
Well, I mean, none of that identifying information needs to be there anyway. So the idea behind this is you're self-sovereign over your own identity. There's no validation by anybody.
Right, but it needs to be there for some, because in your example, you talked about eBay as a merchant and not. I mean, that kind of information requires, your residency, your date of birth. eBay does may or may not collect taxes. I don't know. I've never been a merchant on there. Like there is a personal information that is needed. You can't just go and create an eBay account like you can with Twitter.
Well, yeah, but that would be up to eBay to enforce. But for something like this, it's more so that I can send messages back and forth with you, or trade some lightning payment for an ebook or something like that. Like for that, you don't need any of that. And the whole idea is this is decentralized commerce. You don't need to validate anything about anybody. It's for part of what sucks about centralized systems is that because there are single points of failure, the government can impose regulations and things and say you have to be 18 in order to sell on eBay. That you have to have a bank account in order to buy from eBay or something like that. Instead, you have a decentralized identity system like this. You don't need to require any of that, and you can sort of sidestep a lot of restrictions and not have them imposed on these single points of failure, and consumers have more freedom.
Right, and this is where I see the greatest benefit for something like this. So you will have to still establish your identity with the government, and even say the government maintains the base identity of this with all of your personal details. But then,
no, the government would not be involved in this particular.
No, not in this. But if we look further into the future for something like that, where your personal details aren't at risk, and then you have these digital identities where you only share the necessary information. Like, for example, like certain things you register for only require the fact that you are above 18. And you would be able to cryptographically sign that you're above 18. And this way, the thing that you're signing with doesn't have your personal information for you to get hacked and have that information at risk. So this is a step into that direction, in my view.
Well, I don't think that would be necessarily a use case I would support. I mean, that's, again, putting an artificial restriction, like you have to be 18 to look at this or buy this, which is imposed essentially by the government. Like that's, again, a regulation that doesn't really need to be there. But, if you have two people that want to transact and do something, then make it possible just without any interference at all or any third party. You can just do the transaction directly. And the government shouldn't have control over the identities that you can create on a decentralized system like this. And that's the whole point, is that you can create however many identities as long as you're willing to pay for them for whatever purposes that you might want. Now, they're not all going to have the same reputation. They might not even be linked to each other. But and you probably shouldn't if you're creating multiple identities. But the idea is that you can get reputation within the communities where they matter, and use that for whatever purposes that you might want. And this way it gives you anonymity, it gives you privacy, and it doesn't leak things out all over the place. The model that you proposed, Tom, for example, of the government having all of the data in their central storage or whatever, that's a huge privacy risk. If there's ever a data breach in that central government database, everyone loses everything. You're doxxed forever, and that sucks.
Wait, stop. I'm not proposing that already exists, right? I'm talking about the real world right now. The government has all of your personal data. It's there. It's in their database. It's already there, okay? My problem is that this world does have, and before the live chat, choose me out for being a statist. I'm talking about like the real world reality where there are websites where you have to be 18. For example, if I want to go to an alcohol site right now, I still got to click, yes, I'm over 18. Now, there's absolutely no verification here. Like a 10-year-old can go to the site and click yes. Like, so what the hell is the point of having this thing, right? But in the real world, there are a million things you fill out all the freaking time on the internet and in person on pieces of paper. Your date of birth, every time you go to a doctor's office, you want to go to a new doctor, you want to go here, you want to go there. Every other day, you are filling out some kind of a document because of regulation, which is not going anywhere, okay? Because of regulation, you're filling out a document with your personal information. Let's start with having that go away. This information is already at a government central server. There's nothing I can do about that. There's nothing you can do.
Yeah, but you want an open API so anyone with the right token can go get it? That's like opening up a whole new attack surface. I think that's a really bad idea, Tone. Right now, it's sitting in some government vault behind multiple layers of security with no external access. And that's because they know that if they lose this stuff, that it would dox absolutely everybody. But the system you're proposing is like, okay, let's make it available, but only for certain people that got the right permission. That's a huge attack surface, Tone. I don't think that's a good idea.
So you're saying I can't have like my own cryptographic signature that doesn't risk that data, but that says, hey, this guy, this is his personal signature, digital signature.
Well, so the web of trust model is a little bit different in the sense that what you do is you get signatures from other people. And if you've actually, so if I wanted to know like Christine's age, and I'm connected to you and you're connected to Christine, what would happen is that you've attested that Christine is at least 18. And if I trust you, then I can trust that Christine is 18 and I can go from there. So it's based on that instead of a central authority. It's sort of everybody has their own set of data that they can attest to because they've actually seen it or something. And that's how that works instead of some central authority like a government.
All right. Yeah, well, we need to talk more about this in detail. It's a really interesting topic.
I mean, Christopher Allen's been working on this for a long time. If you ever want to have him on the show, I'm sure he would.
Yeah, we gotta. When you get back from your vacation, Jimmy might be missing from the show for a little while. We'll try to get Giacomo back. But when Jimmy gets back, I definitely want to get the Understanding Bitcoin up and running, and that's where we're gonna dive into a lot of this stuff.
Yeah, it sounds like you can really spend a lot of time talking about decentralized identity and ruin Facebook's and Alphabet's business model.
As long as there's no shitcoin, I'm willing to discuss the situation.
All right. And our final story is Fidelity Digital Assets. A growing number of institutional investors believe that digital assets should be part of their investment portfolios, according to new research from Fidelity Digital Assets. More U.S. investors are finding appeal in digital assets versus a year ago. Investors in Europe are more likely to own digital assets and have a more progressive view of the asset class versus U.S. investors. I'll pull up a few stats here that they mentioned. They did a survey with about 800 people, 800 institutional investors. Digital asset ownership, 36% of respondents, 27% in the US and 45% in Europe, say they are currently invested in digital assets, so more popular in Europe. The survey revealed higher penetration with crypto hedge and venture funds as expected, but also the financial advisor, high net worth individual, and family office segments. US investors allocated to digital assets increased to 27% from 22% in 2019. Let's go. There was another point, appeal of digital assets. Almost 80% of institutional investors find something appealing about digital assets, with the three almost equally compelling characteristics across US and European investors being uncorrelated to other asset classes, an innovative technology play, and high potential upside. Digital assets within a portfolio, the majority of institutional investors feel digital assets have a place in their portfolio. The opinions vary on precisely where. Nearly 40% of institutional investors believe digital assets belong in the alternative asset class, while 20% of investors believe they belong in an independent asset class. Tone, they're finally catching up at institutional investors, are they, according to?
Yeah, these numbers are a lot higher than I would have expected. So this is good to see. Since the futures launched by the CME over 2 years ago now, 2.5 years ago, was December 2017, right at the top of the bull market. Wall Street and institutional investors have been becoming more and more comfortable with Bitcoin, which is good. I think the more comfortable everyone is, especially the high net worth and the institutional investors, the better it is for Bitcoin. Smarter people will want to come and work in this environment and build better and better tools. What I found most interesting about this is how Europeans are a lot more interested in Bitcoin than in the US, which is interesting because I always saw the US as the big driver, but it should have been Europe, because I think the European common currency, the euro, is a lot, is a lot more dangerous to hold on to than the US dollar. So I've always anticipated the European common currency to break up into its components. So it's very good to see that the Europeans are taking Bitcoin a lot more seriously than the US counterparts or other regions. So that was great.
Yeah. Factors slowing institutional adoption, despite the upward trending numbers of institutions adopting digital assets, some reticence remains among the obstacles to digital asset adoption cited, where price volatility, concerns around market manipulation, and lack of fundamentals to gauge appropriate value. Some more FUD on that part. Jimmy, what's your take?
Well, so this is, to be expected. But yeah, I mean, institutions can't really ignore Bitcoin much longer, because like the returns that people are getting from Bitcoin are just absolutely obliterating whatever returns that they're able to get. And, you can only ignore that for so long before all your clients are asking, what the hell is going on? If we just put 50 bucks in Bitcoin 5 years ago, we would be doing way better. And that's the sort of mentality that a lot of these institutions are having. And all of these concerns, I guarantee, go away as the number continues to go up. As I think Safety would say, they haven't embraced the number go up technology yet. And once they do, they'll be in droves, and it'll be a stampede, and not. And yeah, someone once said, like, there ain't no FOMO like institutional FOMO.
Yeah, I think a lot of people are interested in it. They just, a lot of people aren't totally educated in it, still reluctant, but we see from this report things are at least improving year by year. Should we start on the mempool?
Yeah, let's take a look at the mempool.
All right, here we go.
All right, if you scroll down a little bit, it looks like the mempool's mostly clear. I think it's less than, it looks like one block of transactions. If you go up and click the blockchain tab.
Price dropped a few $100. Everyone became a hodler.
Click the blockchain tab. And yeah, so there's one block and change in the mempool right now. So you could probably get it in for 1 sat per byte in the next like 3 to 6 blocks. Certainly we'll go through overnight. If you need it in the next block, you're going to have to pay in the 18 sats per byte range. I mean, it's super cheap. Like if you need to do consolidation, now's the time. This weekend is definitely the time. You're going to be able to do, I mean, like, look at 2 blocks ago, 3 blocks ago. Those weren't even full. So that tells you everything that you need to know. Weather is clear.
All right. And we want to remind everyone that we've got, wait.
No, that's not the website you want to go to.
Yes.
I saw the autocomplete, Christine. What have you been doing? What are you doing, Christine? Are you cheating on us?
In any event, Programming Bitcoin is out there for all of you guys to read and enjoy. Learn how to program Bitcoin from scratch from Jimmy's song. Jimmy, tell us about your book.
It's for programmers. If you're a programmer and want to learn Bitcoin, this is the book to get. My other book is the Little Bitcoin book, which I can show right here. It's in English, Spanish, and Portuguese right now on Amazon. It's for no coiners or pre-coiners or people that don't know much about Bitcoin. It'll explain everything that they need to know in order to get started.
Excellent. Okay, so I'm going to stop sharing and Wow, the markets have been crazy today. Total bloodbath on the street. That's impacting Bitcoin as well. I'm interested in hearing your TA analysis, Tone.
Yeah, let's go and take a look at the charts. The S&P really stole the show today. I mean, people had started making fun of me of being very dumbfounded by the rise in the S&P, and I've been calling for a huge.
I'm guessing that
Uh-oh.
something happened during the screen sharing. Yeah, like there's
He'll be
I
back
think he
with
has
us.
way too many tabs open or something like that. It's
What happened?
to,
You're back?
yeah, what happened? The screen share didn't work?
No, no, I don't know what happened. I just got like a message from Zoom saying it abruptly stopped. Are we back? We screen sharing?
Yeah, I mean you froze for a little bit. There we go. There's the S&P. Wow, that's a giant down candle. Wow.
Yikes.
So as I was saying, this is the S&P 500 daily chart, and people had started making fun of me for becoming a huge bear in the S&P 500 right here. It was right around this day. It was at the end of May, May 28th. On May 29th, I had called the top of the S&P 500, and then I took a big short trade right here, May 28th, May 29th. That short trade ended up getting stopped out June 2nd or June 3rd. I believe it was June 2nd, end of day. I got out of that trade and I went back in again for another short. It was, unfortunately, it's a little too hedged. I didn't think the market would fall this much. So my profit from this trade is already limited because I kind of put a hedge on that trade. Had I thought that the market would have like the worst day in 3 months, I would not have hedged the trade, but I did. Anyway, long story, doesn't matter. I was calling for the double nine. I expected today to be a double nine, but the market opened so badly, it never even got a chance to print it, which is also why I went in yesterday. If I look at the futures market did give us a 9 yesterday because the futures were 1 day ahead due to the holiday where the futures traded, but the cash market did not trade. This thing I'm going to delete to get it out of there. In any case, I believe this is a bigger correction in the making. I do not think this is a one bad day off. So it's possible we can rally tomorrow. It's possible we can rally on Monday as well. But I do think this is going to turn into a much bigger correction. On a weekly scale, I sent out a tweet saying that I considered last week's candle to be a quasi 9. And we talked about that because this candle right here was a red 1, but it was only off by a couple of points that prevented it from reaching its 9. Because if we look at the Russell 2000, it did reach its 9 last week. And if we look at the NASDAQ 100, and I believe the NASDAQ itself, they both also reached its weekly 9 last week. So there was lots of things calling for the top of the market at the end of last week. And here we are. Today's day erased like 3 weeks of S&P's gains. So huge down day. I think it's going to get worse. I think we are going to fall to at least 2750. I think this is just it's not like, I don't want to say it's just the beginning because today was a day I expected to take a week to develop. So it's maybe the beginning time-wise, but price-wise, I think we're halfway through the correction. So the big questions are, what happens to other markets? I also called the top in oil this past week, and that beautifully topped right there. You can see my little red arrow. So oil has been behaving fairly well with the indicators. Let's go straight to gold. I think gold will be fine. Usually gold crashes with the price of stocks, but not this time. I think that the second wave of the stocks going down will force people to invest that money into other assets, gold being one of them and Bitcoin being another. Now, Bitcoin did fall today, but also, as I've been saying for a while now, I do think that Bitcoin is correlated with the market. However, even if the market does go to new lows, I do not expect Bitcoin to go to new lows. I think Bitcoin can pull back. I think the worst case scenario for Bitcoin is $7,000 this summer. I think 7,000 this summer is the worst case for Bitcoin, and it would set up an amazing buying opportunity, in my opinion. It would be, first, it would be the right shoulder of a potential head and shoulders. If we start rising from 7, it would be the an additional touch of the 200-week moving average, and it would be a nice clean pullback, considering we've rallied so much from 3,800 all the way to 10,500 for a perfect top right here last week. We are also right at this resistance line, which I've been talking about for over a month. And I am looking for a 1 to 4 week correction. This is week 1 of the correction, and this week is more than halfway over. The daily, however, is forming a beautiful ascending triangle. I'm just going to take a look at the BitMEX funding rate. Nothing there really to stand out yet. But if we look at this triangle on the daily chart, we now have an official triangle. We have hit the horizontal line 3 times. We have hit the rising line 3 times. A little bit of a discrepancy here, but I'm going to let that slide. And I think this is a good triangle. So now, over the next few weeks, there's going to be a major battle between the bullish nature of the ascending triangle on the daily versus the continued bearish nature of the pullback on the weekly chart. This could all be resolved tomorrow if S&P crashes another 1,000 points, and well, I'm being sarcastic. S&P crashes another 100 points, and Bitcoin crashes maybe $200 or $300. In which case, we would break the parabolic SAR, we would break below the triangle, and this triangle would no longer make sense. We would then be back to a horizontal channel. If the price of Bitcoin falls down to the $8,600 range and rallies from 8,600, we can consider this to be a horizontal channel. A horizontal channel at the top of a trend is, of course, bullish, just like the triangle, just not as clean. So these are the two things that I'm really watching in the world of Bitcoin. That's pretty much it, guys. If you want to support, please check out the on-demand educational videos on tonevays.com, along with the affiliate codes. If you are looking to sign up for VPN services, or you need a Bitcoin debit card, or you're going to be using TradingView as a power user, please use the affiliate codes. All right, that is it. Unless there is an incredible question out of the live chat.
Well, that wraps up this edition of Bitcoin Brief with Tone Vays, your Bitcoin educator and trader, and Jimmy Song, your programming Bitcoin author and all things technical with Bitcoin, and Christine Lee, New York-based reporter, being your moderator today. Thank you very much for your analysis, guys. Have a great day.
Fiat Delenda, this song is done.